Well, I want to welcome all of you who are here, all of you that are tuning into the replay. So this is really profit first for Amazon sellers. And one of the things that I've heard when working with Amazon sellers time and time again is, and it's almost like a secret, like we don't want to tell anybody, but we feel like we're making money, but we're not sure if we're making money. Or,
Mm.
maybe we've been working on our business really, really hard and we're getting really great results, but we're not necessarily being able to pull a paycheck yet. And we don't really foresee being able to pull, like the probable almost certain future is things are going to stay the same. And so if you're not pulling a paycheck now, there's never going to be like a convenient time where you're like, I just have an abundance of money. I have all the money in the world. I'm ready to start paying a paycheck. But the Profit First really allows you to not have you be constantly in reaction to what's going on to your business. It allows you to actually have your business serve you, not have you serve your business. Because we started our business with a desire for a certain lifestyle, a certain level of freedom, a certain level of ability to, to have the freedom that we want. And that's really what we started. So we want to help make sure that the actions that we're taking in our business are consistent to actually get us that. So to do that, we've got three of us that are here today. We've got the author of Profit First. We've got Mike. We've got Cindy, who's a Profit First mastery level certified. And then what that program is she's actually gone through a lot of tests. She's been certified. She's been working with Mike and his team for a long time. And she's been working with Amazon sellers specifically. That's her niche, is that she really works with e-commerce people in the bookkeeping area. And then most of you know me. I'm the author of Unlikely Entrepreneur, and I'm really very much in alignment with, I love, Mike, how that on your signature, it says that your mission is to eradicate entrepreneurial poverty.
Mm. Yeah, it's funny. I did an interview. One thing that's kind of cool is as a book gets popular, you start getting interviewed by different outlets and sometimes television and so forth. And I got a call from MSNBC, and they said, what's the key, from my vantage point, to navigating your business through the highs and particularly the low points? Like, do you just have is it your character? Do you have to have a certain amount of drive? Do you have to have a crazy work ethic? And I've come to believe it's none of that. I think the driving factor for success in an Amazon selling business, in any kind of business, is, do you have a purpose beyond just making money? Because, listen, the ground floor of every business is you have to make money. We all know that. That's the only way to be sustainable, and you have to be profitable. But beyond that, the reason I say I am here to eradicate entrepreneurial poverty is that's my life's purpose. I truly believe that the paradigm for business is flawed. There was an SBA study that said 83% of small businesses, Amazon sellers included, 83% of small businesses are surviving check by check. If that Amazon deposit doesn't come in next week, and I know Amazon because I'm also an Amazon seller myself, on a very small level, not nearly as sophisticated as a single person in the audience here, but I'm an Amazon seller myself, and I remember Amazon delayed deposits like 3 or 4 days. I can only imagine how that's affected some people, because 83% of businesses, according to the SBA, survive check by check. I have been an impoverished entrepreneur where there's a lot of money coming in, and the outside world thinks I'm like a millionaire or something, and I'm going bankrupt. I had to figure out a way to first eradicate my own entrepreneurial poverty. That's why I wrote and developed Profit First. And subsequently, I realized this is my life's mission. I need, my goal, my dream, and I know it sounds impossible, my dream is, instead of 83% of businesses surviving check by check, I want 83% of businesses posting quarterly profits. I want to flip the whole paradigm. I think Profit First is the method, and now my life's endeavor is to do this. And the lesson, I think, for all of us is, if we focus on why we're doing our business beyond making money, but what's the real purpose, how is it serving us, and how are we serving our community through what we do, that becomes the driver. So when our business does dip down, it keeps us motivated to keep pushing forward.
And that's one of the things that I love about Profit First, and I love about your mission, and I think why we connected so much. And so, with that, I just kind of want to go right into like what we're going to be talking about on this webinar. We're going to be talking about specifically the benefits of implementing Profit First, some of the basics about setting up Profit First, some of the adjustments Amazon sellers are going to make, and we're going to talk about the 4 steps of implementation. And we can't break in everything. We can only do so much in a 1-hour webinar. So we're going to be doing the high level overview, and then we're going to be having a workshop where we break things into more depth. But, when we have Mike here for the next couple of minutes, I want to make sure we get the most out of his very valuable time. He was very generous to come be on this call with us. So we're going to be going over those things. Now, just a reminder to stay to the end. We're going to be showing you how to register for the following workshops. We're going to have a guest spot available on the Unstoppable Entrepreneur podcast. And then we're going to be raffling off a 20-minute call with me or Rochelle and a couple of guest spots on our next Momentum, which is our group coaching program. So stay to the end because we've got a lot of great things at the end. So, Mike, just to kind of like I know I kind of like started there, but can we talk a little bit about, because I think some of the people saw the preview video and that, the lesson from toothpaste tubes. Can you share that? Because I think it's an amazing analogy.
Well, thank you. Yeah, this is, I think this is one of the most important behavioral principles that you as a Amazon seller have to understand. It's called Parkinson's Law, and I'm kind of looking off screen so I can look at the slide myself. But Parkinson's Law is a behavioral theorem. And let me tell you kind of the traditional model when it comes to making money and then what Parkinson's Law states. In the traditional model, they say it's economics 101 that as demand increases for something, there's more consumer demand, that supply will increase to meet demand. It's economics 101. But what Parkinson, this was a theory, a philosopher, if you will, of the early 1900s, Parkinson discovered, and this has nothing to do with Parkinson's disease, by the way, a different guy.
Good
Parkinson notices, he notices that it's actually not demand dictating supply. Supply actually dictates demand when speaking from a human behavioral perspective. And what this simply means is that the more available a resource is, we automatically, as humans, consume more of it. I like to have a cold beer on the weekend or something. If you put a beer in front of me, I'll drink it. If you put a 6-pack in front of me, I'll probably have 3, or maybe if I'm really pushing me, like 4. If you put a 12-pack in front of me, I'll actually maybe have 5 or 6. As the supply increases, our consumption automatically increases. And maybe you can't relate to the beer, but this works with toothpaste, and which I'll explain in a second, but it also applies to money. You see, in this whole presentation, we're going to be talking at least from the general aspect of profitability. Here is a core thing I want you to be aware of. Parkinson's Law, our natural human behavior, is affecting our use of money. As money comes in, it is natural to see the supply and availability of money and make decisions based on what we see. If there's more money in there, our natural response is to actually utilize more money. I can make investments. I can get more inventory. We find ways to subconsciously justify its use. Now, that's still a little esoteric, so let me explain it from the toothpaste standpoint, because I suspect tonight everyone watching is going to experience this. When, I'll pretend my pen here is a toothbrush. When I go to bed tonight, and when you're ready to go to bed, when I brush my teeth, I take out my toothbrush, I take out my toothpaste, and if it's a brand new tube of toothpaste, like the picture there on the left, I'll put this long bead of toothpaste on my toothbrush. And I'll turn the faucet on to dampen the toothpaste in the toothbrush, and sometimes the water rushes so quickly over that it pushes the toothpaste in the sink. And I look down the sink and I'm like, that is disgusting, all the bacteria down there, and who knows what else is down there. So I grab my toothpaste, my new tube, and put a big bead on it again, which I assume we're all familiar with. Now the funny thing is, when the toothpaste tube is like the one on the right, like the whole game changes. I now have my toothbrush. I pull out the toothpaste. I see it's almost empty. I'm like, oh, well, and I put my toothbrush down. I start squeezing it really hard to see if I can get just a little bit of toothpaste out. I start biting on the toothpaste tube to get it out. I will bend it over the corner of the sink. I'll cut off the end of the toothpaste tube to get a little bit on. And that's the other key. I don't need a full long bead anymore because I'm not getting one out of it. I find that just a small little droplet is enough to brush my teeth. And I think, Robin and Cindy, I think that the funniest part is now when I turn on the faucet and the water, if it knocks the toothpaste off in the sink, I look down, I then look around, see if anyone's looking. If they're not, I dive in after it and start brushing away. And I always find that amusing because I think that speaks to human nature. It speaks to who we are. But it's also the absolute definition of Parkinson's law. Parkinson's law states as the supply adjusts, our demand and utilization of it adjusts accordingly. The full tube of toothpaste, we start using more of it. The near empty tube of toothpaste, we use it more conservatively and more innovatively. And I'm sure you experience this too. A full tube of toothpaste may last you 2-3 weeks. An empty or near empty tube of toothpaste also lasts 2 or 3 weeks. It's amazing that two things happen. With an empty tube or a tube with very little left, we become first more frugal. That's obvious. We use less of it. But even more fascinating and more significant, according to Parkinson, and it's true, we become more innovative. We bend it over the corner sink. We bite on it. We cut the end off. We do stuff that we wouldn't do when it's full. And the lesson here that I want everyone to understand, we are all humans. We all have our behavior controlled or run according to Parkinson's law, and this toothpaste experience applies to all aspects of life. It applies to beer, as we talked about earlier, but it absolutely applies to money. When we see one bank account and all our deposits go in there, and as an Amazon seller, I'm sure sometimes there's significant deposits that come in. The sales come in, it's the end of the month, and a big chunk of money comes in. Our mind behaviorally sees a full tube of toothpaste. So naturally, we feel comfortable squeezing out a large amount. Now, as the time wanes on and that money depletes very quickly, it becomes an empty tube of toothpaste, and then panic ensues. There's not enough money left over. We become conservative and frugal. We go through these massive peaks and valleys, which is the worst form of money management. Now, traditional accounting, and Cindy can speak to this, traditional accounting says you need to read your P&L, profit and loss statement, your income statement, your balance sheet, your cash flow statement. You got to do budgets and projections. You got to know all the numbers. And if you do all this stuff, you'll actually know exactly where you are. But from the entrepreneurial vantage point, for us to comprehend all this and then on a weekly or daily basis be juggling all these numbers, we don't have the time. So we revert to what I call bank balance accounting. We grab our phone. I was looking for my phone. We grab our phone. Notice I conveniently have my sticker on the back there. We grab our phone. We type it in. We go to our bank and we see what the balance is. And when we see what the balance is, we say, and we make decisions according to Parkinson's law. So, and I know we're going to go to future slides, but the premise of Profit First is this. Don't have one account. That's a full tube of toothpaste. Instead, intentionally set up multiple accounts, and as money comes in, allocate it to different purposes in advance. Set up plates, if you will, with different stacks of money as it comes in, divided for different purposes. Because now when you log in to your bank account on your phone, you can very quickly identify what money is available for what purpose and work within the confines of a near empty tube of toothpaste. And the greatest irony is when you have less money available to run your business, the natural response is, I can't run my business. But the behavioral response is, I will be frugal and I will innovate. And the most successful companies actually make less money available to run their business, and they start to explode in growth because they have to reverse engineer their profitability. They have to become more innovative, and they have to be more frugal. So that's the essence of Parkinson's law, and it's a critical thing to understand when you're going to also apply it to your money.
And I definitely, because when I was in the beginning, I mean, like, there were points where I was like, I have no money to source. I must find things to source. I literally sold my daughter's crib. I was like, she don't need a fancy crib. I bought her a $25 crib off of Craigslist. In retrospect, I'm pretty lucky I didn't get bed bugs. But, like, like after the fact, I was like, that was, like you look back, you're like, that was probably not the best choice. But, like when it came down to it, I mean, like, I was when I was at friends' houses and I was like, your book, you looks like you have some dust on that bookshelf. I can get rid of some of those books for you, like, And then once your business gets to a certain point, you start to get complacent. And so, it is really important to have those things kept separate. Now, Cindy, one of the things I kind of wanted to highlight, because my husband's really analytical, where I'm like always like, I'm ready to like jump in and take the next big idea. But my husband's very analytical. And I know that a lot of people, especially if they come from an accounting or bookkeeping background, they might have some questions about profit first. So, because profit first and bookkeeping, they're related, but they're not the same, right?
Right. They're actually very different. And many times people come to me and they want to implement profit first, but they don't have a system at all for taking care of their numbers. And you can really implement profit first without an accounting system. But when it comes down to April 15th, most of us need an accounting system. And as Mike was talking, I was thinking about a recent example of Parkinson's Law has to do with our time, and we all have to file our taxes on April 15th, or we have to file an extension. And that last couple of weeks for us in the bookkeeping industry is really busy, because even though we've known that we had to file taxes on April 15th, and we've had 90 plus days to kind of get that done, invariably we're all down to the last week before April 15th, getting our stuff together and getting ready to get our taxes filed. So time is another place where human behavior and Parkinson's Law come together, and tax day is an example of how we work right up to the last minute and get those tax papers sent out on the 15th. But bookkeeping is a separate process, and like you say, Robin, it is based on accounting rules. It helps you understand profitability. It helps you meet your tax obligations. Whereas Profit First is really more of a cash flow system, and it's engineered to work with what we already have, which is our human behavior, as Mike described. So I think when you put those two things together, you get some really powerful tools to drive your profitability in your business. And I know there's been some discussion on some of the forums about, do I have to be on a certain platform for accounting? Do I have to use QuickBooks? Do I have to use Xero? The reality is, to implement Profit First, you don't have to be on any of those things. You can implement it just with your bank balance information. But I think if you combine those things, you get a really powerful set of numbers that you can relate to and really drive good decision making in your business. So, Mike, I think it'd be great if you told us a little bit more about the behavior behind Profit First. What have you learned about people's behavior around money and their numbers?
Yeah, so, well, to expand a little further, Cindy, on what you were saying is, what's interesting is I consider Profit First a little bit like understanding the stock market. Maybe it's a good analogy. Profit First, as we go through, it's a very simple system. We allocate money in advance of using it to these different plates, as I call them, and now we know what's available for what purpose. My mother used the system, by the way. This isn't something new that I invented or something. This is simply a new application doing it in businesses. But this is something that's been established in our personal lives. And my mother did it. When I was growing up as a child, my mom worked at the local store, and I don't know how much she made, but just for easy numbers' sake, let's say she made $100 a week working part-time. And when she'd come home with her paycheck or cash, she would put money into different envelopes that she had set up. And on each envelope, it said a different word. One of them was food. One was rent for the apartment. Another one was give back to the community and the church. And another one was fund money. And I'm sure she had others too. But here's what's fascinating. When she'd come home, she would divide money into each envelope and then close the envelopes. When she went to the food store, she always had enough money. Now, here's what's fascinating. When she went to the food store, it didn't mean she always had the same amount of money. She always had enough money. She'd go to the food store and then open the envelope. There were some weeks that maybe she would work it, but she only worked a little less time because she was not feeling well or sick, so she got less gross income in. And so the money got divided up and there was less for the food. Other times she worked overtime and there was more. But what it meant is when she got to the food store, she had to work with what's available. That's part of the Profit First concept. Some costs are fixed. Sometimes, if you pay rent for a warehouse or something, I realize that can't be variable. But other costs can be variable. The supplies you can buy and stuff like that can vary based upon the money you've available. So Profit First is a percentage-based system based upon your top line. It allocates money out to these different plates, and then we work with what we have available. The wonderful thing is because you're doing bank balance accounting, meaning you're not looking at the whatever accounting system you use. You were exactly right. You could use QuickBooks or Xero or FreshBooks or even a spreadsheet if you wanted to. Not that I recommend that. But you simply look at your phone, and on your phone or however you log into your bank account, you can see instantaneously what money is available for what purpose, what has been reserved for profit, what's been reserved for purchasing inventory, what's been reserved for other expenses, what's been reserved for your tax liability. Right now, it's as we're doing this, it's April 21st. It's right after tax season. A lot of bills were due, and I used to get caught, effectively with my pants around my ankles. I didn't have the money reserved, and then the panic would ensue, and I'd have to get money for taxes. So we allocate that money in advance using the Profit First system, and when tax time comes, we have it available. Here's one of the most important, or another very important principle, along with Parkinson's Law, I want you to understand, and it's what's called sequencing or prioritization. And it's also human nature for what comes first is the most, something we put the most significance on, and something that comes last is something we generally ignore. When I was in, I guess it was third grade, the sport of the gym was, of course, kickball. And we would have captains, and the captains would pick their team. And particularly at that point in my life, I was not that athletic at all. And when they were making selections, I was always the kid that was picked last. And the one lesson I learned is that the one you want least is the one you pick last. For the captains of the team, the last person is the least significant. Now, there's a lot of moral things going on here, but from the way human nature is, what comes last gets ignored, and what comes first is the priority. Perhaps a better example is our health. If we had a health scare and went to the hospital, and they said, you got to make some corrective action, you don't come out of the hospital and say, now I'm going to put my health last. You say, I'm going to put my health first. So what comes first gets prioritized. In the traditional model, we are told that sales minus expenses equals profit. We are told that profit comes last. You must sell, sell, sell. You must then invest, 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 spend, spend, spend to make more sales, and profit is last. It's a leftover. It's something that will happen at year end, or it's the bottom line. Those are the actual terms we use to say it comes last. The problem is, and perhaps some of the people watching have experienced this, when's the last time you had a big profit? If you're putting it last, chances are you haven't. Why? Because behaviorally, it's not a priority. It's something we keep on kicking down the road. We keep kicking the can down the road. We keep thinking that profit's going to be an event. It'll happen one day if I sell enough. But I'm here to tell you, profit is not an event. Profit is a habit. It's something that must be ingrained in our business every single day. You're not going to make $1 million down at the end of the road one day, but you are going to make $10 in profit every day, and over time, that will add up to be $1 million. So we simply flip the formula. Sales minus profit equals expenses. I believe it so much, I've had a sticker made up saying that. Sales minus profit equals expenses. So core to this formula and your behavior is, as you make a sale, the very first step is to allocate money out to these different purposes, and one of those elements is profit. Literally, when you do the Profit First system, starting today, you will be profitable. Why? Because you take a percentage of profit and tuck it away. And in fact, if you really get into it, and Cindy and Robin, you both teach this methodology, you're the experts in it, is you remove temptation. You do specific things to remove it away, so you don't even see it. And now what happens is less money, remember that toothpaste analogy, less money is available to run your business on, and it forces you to reverse engineer the profits. You have to find a way to make your business work within these parameters. For some businesses, as they implement it, it's a little bit of the ice bucket challenge, if you remember that meme that went around like 2 years ago. It's shocking at first when you start taking profit away and you say, I can't pay my bills. But when you can't pay your bills, that is your business telling you, screaming at you, shaking you, saying you can't afford these bills in the first place. We must find a better way of doing it. And one obvious way is to cut some costs, but you can only cut so much. The more important and not so obvious way is to get innovative, to do things that are unique and different. And going back to that, my final thought around this is that analogy of the stock market. Everyone knows how to be successful in the stock market. Buy low and sell high and you will be rich. But there is a reason there's investment advisors and brokers out there, because they study all the nuances. So what I'm sharing with you in Profit First, the basic principle is take your profit first, reverse engineer your profitability, and you'll get there. But I also totally appreciate there are nuances and specialties and unique circumstances. Amazon sellers have a very unique setup. So you need the investment advisor, if you will, and Cindy and Robin, I know that's what you do, but you need that advisor to address all the nuances. So the behavioral stuff is what I'm talking about, but there's definitely nuances when you get into the meat of it.
So it's really about, changing the way that you behave around money. It's about looking at, everybody who knows me knows I'm a huge Disney freak, and I'm also a child of the 90s. So, if my fellow children of the 90s will appreciate my DuckTales reference here. Do you remember Scrooge McDuck would dive into the money pit and he would do the backstroke in the money? When we get our Amazon payout, it's very much like that, because we get these big lump sums and we're like, I just made $14,000. I'm a bala. But really, I didn't make $14,000. My revenue minus my Amazon fees was $14,000. A good chunk of that needs to go right back to inventory, and then there's another chunk that needs to go to operating expenses and things like that. If I keep it in one giant pool, it feels like I'm rich. But then I don't know if this has been any of your experiences. You have that moment of feeling rich, and then 30 days later, there's no more money to swim in, and or 2 weeks later, right before that next Amazon payout, you're cutting it kind of close. So we want to change the way that we're relating to money. So we want to be more like Scrooge here with the Christmas Carol, where he's counting each money is assigned and separated out. Because in reality, all of that money that you're swimming in really is already destined to go someplace else in order to keep your business alive. And if we can stay focused on keeping those things separate, it keeps that resourcefulness, that frugality, that willing to make it work, and that having a real relationship to what's really going on in our business, so that we can make the better decisions. Mike, I know you had a couple other things, about profit first, and, how do you really take profit first? Because it seems like there's never a good time to take profit.
Yeah. And just referring back to that prior slide with those graphics, it is funny, the picture of how you got one picture where he's celebrating Scrooge McDuck, not Scrooge McDuck, but the other picture where he's just celebrating. When that chunk of money comes in, there's that emotional high we all get. It's like, wow, the money just rolled in, right? You see that picture, you see him wow, Donald Duck is just exuberant about how much money he made. And then you see Scrooge there, and it's much more of this, it doesn't seem so celebratory. But ironically, Scrooge McDuck makes a lot more in the long run. And we have to understand that the management of money is truly a behavioral game. Our goal here is not to get better at the numbers. And I know traditional accountants and bookkeepers and coaches all say, get better at the numbers, get better at the numbers, get better at the numbers. I suspect everyone listening in has been told that. You've got to study accounting. I'm telling you, that's not how we behave. We don't have to get better at the numbers. We don't even have to get better at our own behavior. We just need to understand our own behavior, Parkinson's Law, prioritizing what comes first, and then putting the guardrails around it. So yeah, I just wanted to refer back to that, but you can go back to their slide and I'll go through some details here. So focus on what comes first. We already talked about this. This is the new formula there, and it's something I'm sure you've never seen. Now here's the irony of sales minus profit equals expenses. Logically or mathematically, if you're a mathematician, you understand sales minus profit equals expenses is mathematically identical to saying sales minus expenses equals profit. So for the logical folks out there, the formula hasn't changed. But from a behavioral aspect, as you already know, this is a significant change. You're prioritizing profit. It forces you then to figure out how to make those expenses fit, how to run efficiently and frugally. And by the way, it doesn't make you, the one negative thing about Scrooge McDuck there, it doesn't make you a Scrooge. It makes you very cognizant of where you're spending. But business after business, and we have about 4,000 documented or reported applications of Profit First. If you do Profit First, you will not be the first doing it. I know there's many Amazon sellers already doing it, but I'm working with businesses and experts like yourself. with so many different categories. Law firms. We have one company that's over 100 years old. It's a manufacturer, implemented profit first, and they've made a turn in their business because they've mastered their behavior around the formula. So you take your profit first, and you have to reverse engineer your way to get there. Sometimes it's cutting costs. More cases than anything, it's focusing on innovation, increasing margins, and stuff like that. The other question I have up on the screen: who's your most important employee? Many of the folks listening in, I suspect you're the only employee, so then the answer is obvious. But if you have multiple employees, and I did a presentation, it's on the internet, about 4 weeks ago now, is about 1,200 people in the audience. It was pharmacy owners, and during a piece of this presentation, I asked everyone who has employees, and for these pharmacy owners, almost everyone had employees, and I randomly asked 2 or 3 people in the audience. I asked them their name, Bob, Sue, Joe, and I said, hey, Bob, who's your best employee? And he says, well, Margaret. And I asked Sue, who's your best employee? Well, it's Donna. And no one named themselves. And I said, I don't know anything about your business, but you're lying to me. You are the best employee. Because think about the owner of a business. We sacrifice family time. We work through holidays. We will work till midnight. We'll do whatever it takes to support the business, and we'll do it without pay. We'll literally do it without pay. But our best employee, the other person, if they want to see their family and they say, hey, do you mind if I cut out early today? They're our best employee. We'll take care of them. We'll make sure they get paid and make sure they get what they want. But we keep sacrificing ourselves as the owner of the business. Well, that's a bad position to be in, because it's only a matter of time before we start to resent our business. That dream of starting our Amazon seller business becomes a nightmare. So we have to realize, you have to realize, you are the most important employee in your business, and your business has an obligation to treat you that way. So one of the accounts we set up with Profit First is a profit account. That's to use to reward you for starting the business and to celebrate with. But we also set up another account called Owners Pay. You have to get a consistent salary, consistent compensation. You started your business for financial freedom. That's what we need to achieve. You are the critical employee. We must treat you that way. So that's one of the accounts we set up. Parkinson's Law, it's funny, when people hear Parkinson's Law, that the more money is available, we spend more. Parkinson's Law is bad. No, Parkinson's Law is naturally how we're wired. You don't have to change anything about yourself. I think that's the most important thing to realize. It's very hard to change ourselves. If you don't like to exercise, and then tomorrow morning you say, I'm going to start exercising every day of my life, good luck with that. It's hard to transition who we are. It's just often too much abrupt of a change. It's better to say, this is who I am. How do I start building momentum off of my already defined character? So Parkinson's Law, it's a natural human behavior. We see what's available, and we either spend based upon what we see or become more innovative. By simply setting up these different accounts and putting money to different purposes, when you look at the money that's available for inventory, now it's very clear what you have to spend, and you can't spend a penny more. Now Parkinson's Law becomes your ally, and you have to work within those parameters. It will force you to think differently. How do I acquire those materials less expensively? What can I do to manage the shipping costs? You'll start looking at elements that you don't inherently consider because the money is available when there's one big bucket of it. But when you see what is truly available, it'll adjust your thinking, and Parkinson's Law becomes your ally. Bank balance accounting, we already touched on this. That's when you look at your bank account. I am telling you, you don't need to refer to your income statement books or any of that stuff. You can manage your daily cash flow, the flow of money, by looking at your bank account. Now, when there's not enough money in there to pay your bills, you pick up the phone and you talk with your bookkeeper or your coach, and you say, listen, I don't have enough money in here. What do I do? That's a red flag moment. When there's not enough money to do something, Profit First triggers a warning because you don't have enough money, and now you investigate the numbers with a professional. You investigate the numbers and say, what am I doing wrong? Am I spending the wrong money here? Did I buy something wrong? What's the issue? And that's when you deep dive in. The flaw is we as entrepreneurs have been told to always deep dive in, understand all the things every single day. That's not how we run our business naturally. You can run it off of your bank account, and then when a flag is raised because not enough money, that's when you work with a professional and you deep dive into the numbers. And by the way, the final thing is the proof of this. As I present Profit First, this is the pay yourself first method. I think it registers with people, but then they say, is it really going to work in my business? The 401k is my favorite example. 401k was introduced, I think now 30 years ago, 25 to 30 years ago. It has become the greatest savings mechanism in U.S. history. 401k has made more millionaires out of employees than any other mechanism. We don't naturally save on our own. If I tell you, save 10 or 20% of everything you earn, you may say, I'll do it, but when that check comes to you, Parkinson's Law dictates that you'll find a way to spend it. What the 401k does, as I say, I give you a paycheck, I automatically pre-allocate. I take money out before you get your paycheck and hide it away for you until you retire at 65 or beyond. Now, when that paycheck comes to you, you still do your natural behavior. You work with what you have. You spend it all. But the 401ks reserve the money for you, and wealth accumulates, and you actually become, in many cases, a millionaire. So that's what Profit First does. The only difference is a 401k is for an employee. It's for an individual. Profit First is for a business owner. It's for an Amazon seller. It's for you.
So, I want to add, we have some common questions that people ask, and, we've got one that people, I forgot to put it on here, but as soon as people started to ask it, one of it is, well, how do we avoid all of the bank fees? I know that we ended up going with Chase, that we have a Performance Plus, so it was $20, and then I could have unlimited accounts. So it's $20, and then so that's what we did personally. But I don't know if you have any other suggestions for people as far as because I think that is a concern with people. Like, well, am I going to spend $300 a month on bank fees?
Right. So actually, if it's okay to throw it to Cindy, she's truly the expert in the money management component. I don't know, Cindy, do you want to jump in? Give some thoughts?
Yeah, what I see with a lot of my clients is they go to their local credit unions, and a lot of times the local credit unions will work with them to create a package that where the fees are minimal or non-existent. So that works well. There are some packages that you can go to some of the large banks. I use Bank of America, and by bundling 2 or 3 different types of accounts together, they allow me to have the accounts without having fees. So it pays to do some shopping around. I think the credit unions are a great place to start. But go in, tell them what you're doing, and most of the time they are willing to sit down and at least try to sit down and make something work with, at a minimum level for the fees.
And I got to build on what Cindy said. I've had the exact same experience. It's funny, when I implemented Profit First, I think I'm the first guy to do this. I wrote an article for the Wall Street Journal as I was doing it 8 years ago, and I was testing it myself because, by the way, my businesses weren't profitable until I did this system. And I went into my bank. First of all, I thought, oh my God, all the fees are going to rack up, moving money around, and I won't hit minimums. That's going to be expensive. So I went to my bank. It was a big bank. I called the manager over and said, here's what I'm doing. I said, I can't afford fees, so I don't want any fees. And if you're not willing to do it, I can go to another bank and see who is. And he came and he said, oh, of course we'll do it. So it's funny. Even this part of Profit First, it forces you to think differently. How many times have you gone to the bank to negotiate? Did you even know you could? You absolutely can. We just don't think about that stuff when it looks like money's flowing through. So as you implement Profit First, there's no question about it. You can get all your bank fees waived and no future bank fees if you simply ask, and if they're not willing to do it, I agree with what Cindy says. Go to a federal credit union. They're amazing. Local regional banks, amazing. I have a great experience with those folks.
And, the other thing that, people are like, well, do I really need to set up all these accounts? Can I just keep a spreadsheet and then not really keep all the accounts? And honestly, I thought that too. I was like, I got discipline. I can be gluten-free. I can do anything.
Boom, boom, boom. Yeah. So the answer is that's what you already do, right? If you look at your if you look at your accounting statements, you can divide things up into different accounts and divvy the money up. So the answer is, yeah, of course you can do it, but you're already doing it, and how's that working for you? You see, we subvert that system. Yeah, you can put a system somewhere else in the distance. You can put a spreadsheet and all these fancy things, but you're not relying on it. The power of doing it at your banks is you have to go here. You can't subvert it. You can't go around it. I have to log into my bank accounts to see what my bank balance is. The money's divided up here, so it's apparently clear, and I can't do anything else. If I do it on the spreadsheet and I'm on the road and say, all right, I got to log in real quick, and I look, I say, oh, I got all this money here. I unintentionally and subconsciously subvert the system. So be aware of this. You're already doing it. Your accounting system already has that ability, and you've already probably even set it up, or you could, but you haven't. So it doesn't work for most people. You have to do it with your bank accounts. And the other thing is, I want you to be careful about something that's unfamiliar. It's human nature to go with what's comfortable and familiar. I know people, maybe I'm one of the people, I'm not saying, but I've been in relationships in the past that weren't such good relationships and said, I'll never do that relationship again. And the next relationship I went into was identical as the original one. Not because it's a good relationship, but because it's familiar. You see, we're very comfortable with the familiar, even if it's not working. So, and we're fearful of something new. So Profit First, I realize, is new, and it's a little bit shocking because it's different. But be careful of reverting back to something that's familiar that's not working for you. By doing it at the banks, we have 4,000 plus companies. I mean, companies adding every day going to Profit First now. There's companies doing this. They can't now break out of the system that's supporting them. They have to look at their bank accounts on the phone. They can't avoid it, and it's very clear what money is available for what purpose, and it makes sure they stay within that structure.
And I think the other thing that, the question about, because Diane was, she's sneaky like me. She likes to like create a game and then try to beat it. She's like, can we take our owner's pay and can we reinvest it back in the business? And that's actually an absolute negative no, right?
No,
that was my plan. I was like, well, I can always put it back. But I got further in the book. I was like, wait, what do you mean I can't put it back?
Yeah, I mean, that's like saying, I'm not going to eat a donut anymore. I'll cut it in half. I'm going to reduce my caloric intake. I'll cut the donut in half, and I'll just leave a half here. The other half, I'm going to throw in the garbage so I don't eat it. But I'm going to wrap it in saran wrap and gently put it on top of the garbage, and if I'm hungry, I'll pull it back out and eat it. It's like, no, you still ate the whole donut, even though you played this little mind game. The biggest kind of failure point that I see people make with Profit First is exactly that. They say, oh, I'm going to allocate, some money to profit. I'm going to allocate all this money to owner's pay. But if I need more money for expenses, I'll take it out of profit and I'll take it out of owner's pay. What you're allowing your company to do is go back to its original form. You're not forcing innovation and frugalness. You're just kind of playing the shell game. You're stealing from Peter to pay Paul. It does nothing for you. Once you allocate the money for its intended purpose, it has to stay there. And the remaining money for inventory, operating expenses, is what you have to figure out how to run your business off of that. If you can't do it, that is your business yelling at you saying you must get better at this. Think harder, think bigger. And the best way to do it is always with accountability. Listen, I've been doing Profit First for 8 years. I think I'm the longest person doing Profit First. I hope so, because I started with myself. I have an accountability partner. I have another entrepreneur that I'm working with. He's doing Profit First. We've been doing it together. His name's Larry. He started around the same time. We're so strict in the accountability that when I take my profit checks, I don't have any here. When I take out a profit distribution, on there has dual signatures, my line, and he is a signatory on my checking account. He doesn't own the business whatsoever. But the only way I can extract money out is with Larry's approval. And what happens now is when it comes to taking money out of the profit account, I have to go to Larry and say, hey, Larry, I'm taking a profit distribution. He says, is this a profit distribution, or are you going to plow it back in your business? By the way, the words like plow back and reinvest simply mean I can't figure out my expenses, so I'm going to put expenses back in. And I proved to him, no, this is for me as the owner. It's my celebration. I'm going to use it to buy something new or do something for myself personally. That's the only time he'll approve it. It's very easy to go back to the old way and then say, well, Profit First isn't working. No, it works. You have to have accountability. Match up with an expert. Accountants, bookkeepers, coaches are perfect for this. This is their ability to keep you accountable to the goals you've set for yourself. Work with someone else that can enforce that accountability. You'll absolutely stick with it. And the second lesson I've also learned is start slowly. I learned this from the fitness industry. There's a great book on this by Dan and Chip Heath. They wrote a book called Decisive. I think it's a must read. They also wrote Switch, Made to Stick. A lot of people are familiar with that book. Well, in Decisive, they pointed out it's human nature to have big goals. You got to push yourself. You got to be massive, big success, do 10 million, 50 million, big numbers, think big. And they said most people fail when they think big and move big. Instead, we should lower the bar. They said instead set yourself up for small wins so that you easily have a win and then you get success and momentum. How it translates to Profit First is in my book I write about goals of the most fiscally elite companies. Some companies reserve 15, 20, or 30% of money for profit in addition to paying the owners. But that's not where you should start. If you haven't been profitable in the past, start with 1%. That means if you take $1,000 in deposits, we're putting $10 into the profit. You have $990 left to run your business. I'm sure you'll find a way, but you will start the momentum on profit. Over time, after the next quarter or so, then make that 1% 2%, that 2% then 3%, and slowly move forward. By lowering the bar, you're assuring that you won't revert back to the old way that wasn't working anyway.
And like, I know this is crazy because I've got you on the phone and you're amazing, but we are running really far behind now. So
I'm a big talker, kind of.
And so like my anxiety level's up because I want to make sure everybody gets the information.
Yeah.
So a lot of people, because I was like, well, profit first will limit your growth because then you don't have enough money for inventory. But really, when you're really related to what's going on in your business and you're really clear and you're setting up your priorities by saying what goes first, it actually gives you that momentum and the sustainability to grow your business faster and healthier. So what it keeps you from doing is kind of ending up in incredible debt, or not realizing that you're pouring money. We've talked about inventory churn a lot, making sure that you don't do all of those things. So I'm just going to kind of, because Cindy, you've been working directly, and thank you so much for coming on. You are amazing.
No problem.
I want to make sure that
I'll be quiet.
Yeah. So, so Cindy, you've been working with Amazon sellers. Can you talk a little bit about some of the specific things for Amazon sellers? Then I was going to talk a little bit about real revenue, and then we're going to get to the 4 implementation steps. We probably will go a little over, guys, but I will make sure the replay's over if you have to jump off.
Okay, so let's talk about what real revenue is. And in Profit First, if you've read the book, you understand that Mike talks about top-line revenue versus real revenue. And when you have top-line revenue, that's the money that comes into your business before any of the expenses go out that are required to operate the business. So, for example, if you have a $300,000 business that spends $100,000 on Amazon fees, and then you have to spend $100,000 on the cost of goods sold to have that to sell to make the $300,000. Those are really kind of pass-through type expenses. Your business really is like a $100,000 business because you don't have a whole lot of control over the $100,000 in fees and the cost of the goods. I mean, to some degree a little bit, but for the most part, what you really have to manage is the $100,000 that's left. And how are you going to manage that? And when it goes into that one big account, like we talked about, say you get your payout from Amazon, and they've already taken their $100,000 in fees, but you're left with $200,000. Well, that's feeling pretty good, swimming in the pool of money. But the reality is, if you're going to sell something next month, you've got to turn around and invest it in inventory. So you need to pull out the inventory purchases and separate them from your operating expenses. And when you read Profit First, you'll see he doesn't talk a lot about inventory bank accounts in the primary core chapters of the book. But what we've come to find when we implement Profit First with Amazon sellers is that having an inventory bank account is a huge way to understand, by looking at your bank balance, how much money you've got to spend on inventory, and also importantly is how much money you have to spend on your operating expenses, and what can you do to control those operating expenses and get those expenses down. So separating those things is one of the very first things I suggest to folks that are implementing Profit First if they're an Amazon seller. And one of the benefits of doing that is that you can start to see that inventory bank account grow, and you realize that money is under your control. Whereas if you're putting all your inventory on credit cards, then you are under the control of that debt. So it's a huge psychological difference. When we're talking about human behavior, believe me, there's a feeling of celebration by looking at a big inventory account thinking, what am I going to buy for fourth quarter, versus, oh my gosh, I've almost maxed out my credit cards, and how am I going to have more funds to spend on inventory for fourth quarter? It's a very big difference. So that's one of the first lessons I've work with Amazon sellers on. The second one is, do you pay yourself? So many times we're working really, really hard only to invest back into the business, and Mike has talked about that already. Inventory, again, we got to get our mind around what inventory really is, and it can kind of be like gambling. And how much are you willing to risk? And if you continue to take out credit cards to fund inventory, at what point do you stop? You've got to be making calculated decisions about inventory. And if you can't start with a big inventory balance in your bank account, but you can have a plan for growing that. And believe me, it doesn't take long. It grows in a way that you can start to see that you don't have to put money at risk. You may still use credit cards. I've got clients that love credit cards. They get all kinds of points, and they still use those credit cards, but they've got the money in the bank already to pay those credit cards off. And then finally, the last item there is, do you know your numbers? Do you have good books? And Mike talks about that from the standpoint of we really can look at our bank balance on our phone. But then when we do have the red flag that comes up, we have to be able to dig a little deeper, and that's where the numbers in the books come into play.
No,
so Robin,
yeah, because so people will sometimes say, well, I can't, my labor is free. Your labor is not free because we need your business to be paying you. Because if your business isn't paying you now, there's nothing that's going to make it magically start paying you later. So you need to start while you're young in your business even, or start today having a paycheck. And, just to talk about real revenue real quick, if we're talking about, when people call me, say they want mentoring, I would say 7 out of 10 calls. Somebody says, I want to be $1 million seller. I want to do $10,000 a month. There's usually a top line number that they're trying to reach. I want to talk to you about why real revenue really helps you understand what kind of business you're really running. So, when I say 75% ROI, I mean like the ROI we look at for as Amazon sellers on our inventory. So if somebody has $1 million business and 75% ROI, assuming Amazon takes about a third, then, this is your cost of goods. This is your Amazon fees, assuming it only costs them $60,000 a year in operating expenses, then they're going to, before taxes, they're going to have about $240,000 net. But, a lot of times we'll start taking a lower ROI because we want to have more income. And that's one of the things that he talks about in the book is more income will fix the problem. So we lower our ROI. If you lower your ROI to 25% on $1 million business, your cost of goods, as you see, takes up more than half of your total revenue. And then your Amazon fees also take up a good chunk. So assuming that your cost of goods or your operating expenses are going to be the same. And we know that they're not. We know that they're going to be more because you're processing more items. You're going to be tired. You're going to make more mistakes. The difference between how much somebody is, for the accountants in there, this is way oversimplified. I get this is oversimplified. This is not a finite number. This is just to point out an idea. We're talking, so some people could have $1 million business, but have very different take homes. And so when we're looking at the real revenue, so in real revenue, we're with what Mike's talking about, we're taking out, for Amazon sellers, we're taking out the cost of goods, and we're taking out the Amazon fees. So this would really be your real revenue versus this real revenue. And so it really gives us an idea that this business is actually, the 75% ROI business is actually bringing in more money than this business is, even though the top line revenue is the same. And so it really helps us to be really related to our numbers and not get caught up in the top line and forget about the bottom line. Because, all the numbers are important. There's a reason why they show all of them. So, Cindy, I think you were going to talk about, some of the things that you've been looking at specifically for Amazon sellers as well.
Yes, there's 4 steps to profit first, and what we're going to talk about today is how to apply those 4 steps to Amazon sellers. Mike has kind of given us those ideas today, and so we won't dig deep into them. We'll just talk about how they relate to Amazon sellers. We're going to talk about evaluating your business using the profit assessment, because Amazon sellers have a little bit different model. We've got some examples to show you how to use the profit assessment for your business. That's going to involve how to handle inventory. As we talked about before, you want to be in control of that. You want to be your own bank. We want to talk about the rhythm of the income and the expenses, that cash flow. That understanding of the flow is hugely important for knowing where you are in the month and how much money you have left. You know, I've heard my dad used to say, well, I ran out of money before I ran out of month. And, you know, we don't want to be running out of money before it's time for our next payout. So that rhythm, once you get in that rhythm, you start to innately understand it and know where you are and what you can spend money on and what you need to wait. We're also going to talk about techniques for leveling a seasonal business. A lot of Amazon sellers have a huge fourth quarter. And then we're going to talk about how to use the Profit First system to reduce debt. One of the questions that we've been asked before is, okay, I have a e-commerce business where I'm selling things on my website with Shopify, and then I also have an eBay business, and I also have my Amazon business. Can I put that all together? And Robin and I have been talking about this and trying to determine when it makes sense to put those things together and when it makes sense to separate them. And what she and I have talked about, you're not going to find this in the book, this comes from our experience of dealing with clients that are in that situation. When you've got any particular revenue stream that's 20% or more of your top line revenue, then you need to run that as a Profit First system, because you need to be evaluating those, the inflow of money and the outflow of money on its own, because that's starting to be a significant enough pool of funds that you don't want to lump it in with another group of funds. If you're an Amazon seller and it's 98% of what you do, it doesn't justify creating a whole other Profit First system for that 2%. So that's just a rule of thumb, and as we go through some of the examples, we'll talk about how creating that system for each particular revenue stream helps you make decisions. Okay, so let's jump in and start looking at those first steps for Profit First. And Mike's talked about this, so I'm not going to go into a lot of detail. The example comes from the diet industry, whereas one of the first things that a nutritionist or your doctor might tell you is you need to control your portions. The best way to control your portions are to use smaller plates. The same thing applies to the way we use our bank accounts. So if you have multiple bank accounts and you designate them for specific uses, you'll be able to do that bank balance accounting and it'll start to mean something to you. So in Profit First, Mike talks about the 5 core accounts. And absolutely, those are the ones we like to start with. But with an Amazon business, we say there's 6, and the 6th one is inventory. So they're listed there for you. The accounts Mike's already talked about: inventory, income, profit, owner pay, taxes, and operating expenses. That's the first thing that you need to put in place, is understanding that you need those separate buckets to track separate inflow and outflow of the money for those specific purposes. So with those idea that we're going to have those profit accounts, let's talk about how we're going to allocate percentages to each of those accounts. And Robin, if you'll go to the next slide. This is an example that we put together where each of the accounts are reviewed, and you look at your experience in the business and try to determine what has happened in the past. This was a brand new business in 2015. We went back and looked at their profit and loss and their balance sheet, and we determined what those funds had gone, what purpose those funds had been used for, and we did the profit assessment. The profit assessment, and it's outlined in Mike's book, and I think you may have a handout for it, Robin. What you're doing there is you're looking at your historical spend, and you can do that for a year, you can do it for 3 months. I've even got clients that are brand new businesses and we want to start them out on Profit First. We'll do a budget projection, and we're going to start with our budget and business plan, and we're going to break it out that way. So pick a time period. If you don't have a full year, pick 3 months, 6 months, and look at how you have been spending money. Your top line revenue, that's the funds that come in to your business. Then your materials, and you can get that straight off your profit and loss if you're using a profit and loss. If not, go back through your bank statements and add it up. Your materials and subs, that's your cost of goods sold from your P&L, and your inventory spend from your balance sheet. Again, we're talking about cash flow. So while an inventory buy may not hit your profit and loss until it becomes a cost of goods sold, the inventory buy does take cash out of your business. So we add that in. That's why you can't just look at your P&L and get this information. So when you take those items out, as we've discussed before, you start looking at your business. Instead of this being a $622,000 business, this is a $207,000 business. That's the money we have under our control. Now, how are we going to divide it up? And this business, when I did the assessment, they hadn't paid any taxes. They paid them now, but at the time I did this assessment for them, I'm like, well, you've not paid any estimated taxes for the year, so that we knew that was going to be an adjustment that we had to make. But we could pull that information off of our bank, off of our balance sheet, off of the owner's pay, off of the balance sheet, and we get our operating expenses from the P&L. We're going to go over these examples in a lot more detail when we do the rest of the webinar, but we wanted you to see the information to understand that it is available here to you. If you've got your stuff pulled together and want to just take off and work with it, this is what you do. This is where it comes from. And the nice thing about Mike's book and the research that he's done is he didn't just say, hey, here's some guidelines. He went out and looked at the best businesses out there in the different categories of real revenue. So at the bottom grid there, we're seeing a business that has $250,000 in real revenue. How does that work? What are those businesses doing? How are they splitting up their real revenue into the different accounts? And you can see there what's recommended is a 5% profit, 50% owner's pay, 15% taxes, and 30% operating expenses. As the business gets bigger and more real revenue dollars come in, those numbers shift because you're dealing with a bigger base to begin with. But these numbers are in the book, and we also put them here as a guideline. So when you start looking at your numbers, you can determine how you're going to match up and what your ultimate goal is going to be working towards over time. As Mike says, we don't start out, very rarely can we start out with the full allocations, but we work towards it over time. So the next, go ahead, Robin.
So, it's really important. So, sorry, I got something like a thing popped up right as you said that. So as we want to remember that these are target allocations where you're going to take where you're at now and we're going to add just a percentage. We're going to take it, we're going to roll it out over time. Most people get stuck right here at the profit assessment. They get so stuck that they shut down and they never actually start their allocation. So the first webinar in the workshop, we're going to specifically be going through examples of how to do these. And so you'll want to bring your profit and loss. If you've been keeping your things in Inventory Lab or GoDaddy or, preferably Xero or QuickBooks or a spreadsheet, you want to have those numbers ready for you. And we're going to go through that more specifically. But don't get so hung up on having to be perfect. And the percentages can be changed to fit your business. These are targets. They're recommended.
Okay. So the first step we talked about was using smaller plates. The second step is eat your vegetables first. We want to get the nutrition. We want to take care of our business. So by allocating funds to ourselves, to pay ourselves, and to take care of our bills, we're putting things in the proper order. Just like when you sit down to eat, if you started with dessert, you probably wouldn't want to eat your vegetables. So by putting your vegetables first, you eat the good healthy stuff, you take care of yourself, you move on to the situation where you're able to push away the things that aren't good for you. And the same thing happens with your business. When you allocate your income to your account, you're able to pay your bills, you're taking a quarterly distribution, you're fostering a healthy environment for your business, and that feeds the system itself, just that sense of health that you have in your business. So what does that mean in terms of allocate your income to your account? Our next slide shows a good example of what that means. With our Amazon clients, most of our clients have Amazon coming in. Some of them have a few other sources of income. And we've created a spreadsheet that does all this math for you. So when you get the income, your payout, and we're going to talk about flow in a minute, but Amazon already works with a flow because typically they're paying out every 2 weeks. So you get your payout after 2 weeks, the funds are coming in, you've got your income, and then you divide it up based on the percentages. And in this example, the percentages are on the left under the quarterly target allocation percentages. Yes, that's right. Thanks, Robin. Then it's just a matter of spreadsheets doing the math for you. You see the numbers over there. If you've got $19,546 in income in that 26th to the 10th of the month period, then the math works out that your inventory account, if we're putting 35% to it, you're going to have $6,841 going to inventory. Profit, 10%. Taxes. So you can see in this example, it's just a straightforward example of once you've set your target allocation percentages, you plug in the income that you've received and you do the math, and then you move the money. So that's what's involved with the allocation. We do have this spreadsheet available to you if you find that you think this would be helpful to you, just so you don't get lost in the minutia of doing the calculations. Plugging in the information, letting the computer do the rest of it makes it a lot simpler.
And we're going to have this spreadsheet available. So when the GoToWebinar is going to send you out an email about this, and in that GoToWebinar there'll be a link. And if you'll just put in your information, and then it will send you a copy of the spreadsheet. And then you'll have an option if you want Cindy to contact you, follow up. Just please be respectful of her time or not. And but we're not going to, and then you'll have an option to join in the mailing list or not. We want you to have the information. That's why we're here. So this is the part that I got really confronted by but it's really, once you get in it, it's twice a month we're making the transfers, and then we're paying the bills twice. And so then it takes all that financial worry off of you. For the rest of the month, you can focus on sourcing and, watching your inventory turn, on managing the other portions of your business.
That's right. And Mike talked with us about removing temptation, and that is step 3 in the process. And so as you're setting up your accounts, once you decide how you want to do your implementation, if you're going to do all of the accounts at once, you want to take those profit and tax accounts and move them somewhere remote so that they're not in the same bank where you can just hit transfer within bank and move money in and out. You're really at that point not following the system, and you're not disciplining yourself to pay attention to the operating expenses and keep those in line. So out of sight, out of mind. Mike used the example of his mother going to the store and taking the food envelope. She only took the food envelope. If she had took the food envelope with the rent envelope, there may have been something there that she ended up spending money on that she didn't need. So by moving the profit and the tax account to a remote account, you remove that temptation. We don't have to think about it. Then the final step is, step 4, is implementing a rhythm. Enforcing that rhythm, because once we get in touch with what that rhythm is like, then we're more in touch with our numbers, and we have a better sense of, is our money making it through the month, or is our money making it to the next payout? So the 10-25 rule is the rule of setting the dates of 10 and the 25th, the 10th of the month and the 25th of the month, as the date you're going to do your allocation and the date you're going to pay your bills. And for myself, I use that rule, and I have found that it really gives me a sense. It's like taking your blood pressure. It really gives me a sense of the overall health of my business. And what I do, though, with Amazon clients is we work with a little bit different rhythm. Because the funds come in on a 2-week payout, we don't stick exactly to the 10th and the 25th. We break that spreadsheet down, and we work on a 2-week time period. So these are the bills that we're going to take care of and pay in the 10th time frame, or the first payout of the month. And these are the bills that we're going to take care of with the payout on the second payout of the month. So this is another example of how implementing profit first for an Amazon seller is a little bit different than how we would have implemented it with, with me for my bookkeeping business. The other rhythm that goes on is a quarterly rhythm. And on a quarterly basis, we're going to be taking profit distributions. As Mike said, we take money out of the business to celebrate our success of our business. Now, the nice thing about that distribution is that it's doing two things, because we're only going to take half of it out. So half of it is there to be building up our rainy day fund, our vault. The other half of it is there to take out of the business and to celebrate our success. So it's actually doing two things. And there's actually a third thing that comes into play too. If your business has some debt, we use this mechanism of putting profit, or a percentage aside for profit, to start using that percentage. Again, we leave half of it in the profit account, but we will take out a portion of that other half and use that for debt reduction. We still always take somewhere in the neighborhood of 2 to 5% and use that 2 to 5% for our celebration for our success. But the primary portion, if there's debt in the business, the primary portion that's left of our distribution goes towards reducing debt. So that's a way that you can start to work on that debt without it becoming a burden every single payout that you do. Then the next quarterly rhythm that we get into are our quarterly adjustment of our target allocation percentages. We call those TAPs. That's the things we've been talking about, the different accounts like the owner pay, the profit, the taxes. So those types of accounts we are going to evaluate every quarter and make an adjustment. The goal being that we're going to increase our owner's pay, we're going to increase our profit, and we're going to decrease our operating expense. We can't do all that immediately the day one that we implement. So we have a quarterly rollout plan, typically over 6 quarters, where we move in the direction and set goals that we want to move us in that direction.
And so Karen had a really good question. I know we were going to do question and answer at the end, but she said, can we just clarify what the profit is for? Because she said, if we're already paying ourselves, why do we need a separate account for profit?
Well, the way that I've heard Mike explain it before, and I thought it really made a lot of sense. If you think about yourself working for a large Fortune 500 company, you have 2 opportunities to be involved with that company. You can be an employee, and you can also be a stockholder in the company. So as a employee, you're going to get your salary for the job that you do. That's owner pay. As a stockholder in the company, every quarter the board of the business is going to look at the profitability of the organization and determine that they're going to pay out dividends on a quarterly basis. And as an owner, you get some kind of dividend for putting your money into the business and being an owner in the business. So that's the difference. The profit distribution rewards your ownership relationship with the business, and the owner pay rewards you for your work as an employee of the business.
And so the profit is it's going to be quarterly, and you're going to use half of it to pay down debt, or to celebrate. It's going to help you develop a retained earnings, kind of like a 3-month safety net. And then there is in the second half of the book, there's more description on what happens with that profit account. So you might want to like kind of fast forward to that section if you're looking for information on kind of why there is that profit section. So, as we, like, as you said before, we're not going to go straight from, if you've not been putting anything aside for taxes, if you try to go to 15% next week, it's going to be like going on a juice fast after like eating Vegas buffets for 3 months straight. You have to do it slow and steady, lower the bar. So we're going to move towards that in a very slow pattern over 6 quarters. So this is not an overnight plan. This is a long-term plan.
That's right. And the biggest mistake that I see people make is that they want to do it all too quickly. And it's the same thing as Mike described with the exercise routine. If you go in there and you say, I'm going to run, 3 miles on the first day, and I've been, a couch potato for 3 years, you go out there, you're going to pull a muscle, and guess what? Get back on the couch. So we want you to be set up to be successful. So that's why we look at a rollout plan. And as you do a profit assessment, when you figure out where you are based on your historical numbers, then we roll it out and we inch up those numbers over time, over that 6-quarter time frame, which is 18 months. It's not going to happen next week. We take the time because what we're looking for is sustainable long-term behavior change, and we want to reduce those operating expenses consistently over time. If you look at the slide, this business was currently spending 70%, and over 18 months they got down to where that was 50%. And where did that money go? It went to the owner of the business. And I know this sounds like too good to be true, but I can tell you I have lived it. I have done everything wrong in my own business, and I have put into place accounts in my books because I thought, I'm an accountant, I can move this around on my books. Doesn't work. I can tell you I did it for 3 months, and then I opened the bank account. I started slow. I started moving, and over the almost 2 years that I've been doing it now, it has made a tremendous difference. And the difference it makes is your mindset suddenly starts to feel really good about those accounts where money is flowing to you, but you get really creative to think about, do I really need this now? How am I going to spend that operating expense? How can I stay lean? How can I change my process so that I don't take as much time? Those kinds of innovation does not come if you've got money just thrown at the problem. So that's why rolling it out slow gets you where you need to be. You can't I do believe most people can look at their expenses and cut some stuff out. But most of the fixes, when you start getting into the 3rd and 4th quarter, most of those expenses come from real change in the business and real innovation. And it takes time to roll out those plans. So we take that time. We don't feel compelled to do it all at one time and then end up back on the couch because we didn't do it successfully. And there's this spreadsheet that we've looked at before is another tool for helping make those decisions. Okay, so we're talking about rolling out your allocations. When you look at it from the profit first assessment percentages, the target allocation percentages, that information is out there, and it really does look back historically at what's going on, and I think it's a great place to start. But I also like to look forward and kind of take a good snapshot of where things are now with my clients. And we use the spreadsheet to help forecast the cash flow in the business. Now, the first part of the spreadsheet is looking at the income allocations based on the funds that you're going to receive from Amazon and your other sources. And it's divided up into 2 time periods. The ones in the book are the 26th through the 10th and then the 11th through the 25th. We kind of play with those numbers based on when the payouts come. But let's just say first payout, second payout. When you get the funds from Amazon, then based on what your profit assessment said, you can plug those numbers into the green section over there under quarterly target allocations. And that gives you a place to start. That tells you, okay, if you if you do what your profit assessment tells you to do, that's how much money you're going to have. And the key number that this spreadsheet pays attention to is your operating expense account, because that's what's got to pay for everything in your business, in addition to you're taking care of yourself and your profit and your inventory in another place. So this is just the piece of the operating expenses of the business. So the first part of it is figure out your income, put your allocations in, and we're going to play some what-if games. So let's look at the next slide, Robin, and we'll look at the box 2 and box 3, where we're going to be paying attention to the expenses. So go back and take a look at your expenses for these different time periods. So box 2 is looking at the first payout period, and let's say that's a roughly 2-week time period. Look at what expenses typically come due during, let's say, the first half of the month. Then look at what expenses typically come due in the last half of the month. That's going to go in box 3. So we're going to take a look at the expenses, plug them in there, and we're going to see, do we have enough money in our allocation to cover the expenses that we know we've got to cover each month. And this gives us a pretty good feeling for, yes, I can start at that level with my percentages, or no, I need to go up there and tweak it some so that I have a little bit more money in my operating account to get me through the month. And we've kind of got it cut off here, but the very top right, box 4, is just the month, the amount of dollars that are remaining at the as you go through the entire process. Yes, thank you, Robin. So in this scenario, the business had $957 left, and that's great. We all want to end our month having more money than we have expenses. But if we're in the opposite situation and we have less funds available, it's negative, then we need to go up there and play with our allocations. Now, I don't recommend playing with your allocations every month to be sure that you have enough money to cover your bills. That's not the point. This is just to do some what-if games so that we can understand where we want to start. Once we get a starting point, you are committed and you are going to stick with it. But to be sure that we're starting at a place where we're going to be able to be successful, I recommend doing this cash flow projection using the percentages from the profit assessment, but using your real life expenses too, and seeing how much flexibility you have there, and is it going to work? If it's not, we tweak those numbers, and that's our starting point. So we want to stick with it. That's the whole point. Just like if we start a diet plan, we want to stick with it. So we do these assessments so that we can have benchmarks to know where we're at. We may lower the bar. Many clients, when we start, if cash flow is tight, we don't implement all 5 accounts at once. We will start with inventory and profit. And we don't put 50% in inventory on day one. We may start with 15%, but it starts setting in place the behaviors that we want so that we can build good habits. Because when we start building good habits, we start building confidence. That starts leading to competence within the system. And a really nice thing about Profit First is when we're competent with it, we get cash. And the other piece that Mike talked about is accountability. Find somebody to help hold you accountable, because you know, it's just like with exercising. I have a friend that I exercise with every morning, and by knowing that she's there waiting on me, I get out of bed and I go. But there's many a day when I would like to roll over and go to sleep. So accountability is critical to making any kind of new behavior program work.
And one of the things, just to kind of jump in, one of the things that's not in the handouts anymore, but one of the things that's in the handouts that we had was a PDF that's a description of how to start your own profit pod. And all that Mike asks is that you don't charge anything except to cover your costs, because he wants it to be free. But you know, if you want to start a Facebook group or, you know, a small mastermind group where you're having accountability with Profit first. If maybe you're not ready to take on a, work with maybe Cindy or I, but you do want to have that accountability, that's another great option. And, so having that accountability in a Profit First professional can help you with that. But also, even if you just want to find that accountability among your peers, most people need that external accountability in order to really stay focused.
Yeah, that's right. And I wanted to tell you, just as I'm kind of wrapping up here, I want to tell you a success story of a client that has implemented Profit First. She only started it in September of last year, and we've been building up her inventory and her profit accounts. And everything was going according to plan. Everything was going well. She's not a particularly seasonal business with her products with Amazon, but she had a problem in first quarter. Her entire shipment was lost at Amazon, and I know it doesn't happen often, but it happened to her. And she was, I just spent my money on buying my inventory, but because we had been banking an inventory account, she was able to turn around and buy inventory the second time. Now, she's got a lot of it, and she's working it down, but she had inventory back in Amazon a few days before they found her inventory. So that's the nice thing about Profit First, is it gives you the freedom and the flexibility to be able to operate when those unexpected things happen. And she had never had a plan for what happens if my inventory disappears, but she did. She had Profit First kind of there and available to her, and because she had been working it, she was able to go in and buy an entire additional shipment of inventory and send it to Amazon. So I think of her situation and realize the difference that it made for her. And we just had a call last week where we've added for her. She was one of those clients we started with inventory and profit, and just this past week we've set additional goals for taxes because she has been looking at her operating expenses, and she says, I can reduce my marketing expenses and I want to start setting aside money for taxes. So we just started putting in 3% for taxes. We're starting in small increments, but it's already made a huge difference in her business. That's a powerful question, Robin. What if you had all the time you spent worrying about having enough money to pay the bills? What if you had all that time? What do you think?
I think that's an amazing opportunity to take all that negative energy time and turn it into positive energy. That would be crazy powerful.
Yeah.
Oh, I was muted. That's why I was like, why do you guys keep interrupting me? Because I was muted. So all of it, if you really had all the time that you spent worrying about having to pay the bills or wondering if you're profitable, and you spent that really powerfully working on your business, finding replenishables, creating systems, that are going to really benefit you in the long term, then what kind of return would that get on your business? How much would that be worth if you could take, maybe the 10 or 20 hours a month right now that you're spending worrying about, will you have enough money to pay the bills? And you could really focus on, really making a powerful difference in your business. And what would it be worth for you to have the peace of mind around your business and money, to know that you're making the right decisions, to be able to have some sort of concrete proof that says I am or am not making the right decisions. So you don't have to be wondering, am I doing the wrong thing? Am I wasting my time? Am I sacrificing this time with my children while they're young for no good reason? What would that be worth to you? What would it be like for you to know that you're profitable? And how much more energy would you have and support maybe from your spouse, from your mother-in-law, from your sister-in-law, if you could pull consistent paychecks from your business? That's really what Profit First has to offer. Honestly, I was a little skeptical when, it was a couple of people in the academy. It was Ashley, it was Common, who brought this book to my attention. And I was a little like, oh. Once I saw really the value of implementing this into Amazon businesses, and I started thinking about how this would have affected me if I had found this 5 years ago. I really got moved by what a powerful difference it is. And we're only offering this workshop. Cindy and I are only doing this because we're really committed that people get value. If we were looking to try to get the most possible money, we would only do it, we'd charge, it would be a different game plan. This is out of our commitment that everybody who wants to has access to the ability to implement profit first into their business. Now, we're going to have a workshop, and in the workshop, we're going to be talking about 3 main things. And one is to build a powerful relationship with the money in your business. We want you to be really connected to and being in control and not in reaction to your business. We're going to do that by opening up the accounts, understanding our profit instant assessment. We're going to be able to have some retained earnings. We're going to actually prioritize profit and say that we are our best employees and we are worth being paid and being paid well, because we're investing a lot of time and our time is not free. So we're going to implement profit first. And then I have a couple coaching clients that I know that it is part of our action plan that you be taking a paycheck. I know 3 of you, it's by June, 2 of you, it's by July, and I have another 2 that are by August. Taking a paycheck is one of the goals of the course. Now, depending on the way your entity is set up, you might be taking a draw and not technically a paycheck, but we want you to be consistently being able to benefit from your business. Your business is there to serve you, not the other way around. And that's what we need from our Amazon business. That's what we started it in the beginning. So that's what we're going to be covering in the course. In the webinar schedule, and God willing, there will not be any more middle of the webinar breakdowns. But, we're going to be looking at the first one is going to be preparing your profit assessment, selecting the accounts that you need. We're going to talk about what you need to do to open the accounts. You're going to need to complete. We're going to work on completing your assessment. That's going to be your homework, and to open your accounts. We're going to have you look at the percentages where you really are. We're going to get really connected to where you are financially. And then the second week, we're going to be looking at a review of the target allocation percentages. Some of you were asking what the target allocation, what TAPS is, and that's those percentages. How much is going to profit? How much is going to owners pay? And we're going to very clearly spell that out. And we're going to work on getting you on either a 10-25 distribution schedule, or every like maybe the Monday after your payout, because we want to get it so you're very consistently and very reliably getting into the habit of allocating your income. We're going to look at the profit first spreadsheet and get that completed for you and working for your business. And if we find that, some of you might find that your expenses exceed what your operation is, and we're going to talk about how to handle that. We're going to be looking at making your allocations for the 25th and we're going to talk about digging into the details, sample cases, as far as how those allocations are going to work. And then we're going to be talking about, and June 2nd, we're going to be talking about making your allocations. We're going to be talking about quarterly distributions, review of your process. We're going to make sure all your questions are answered, because we know that a lot of people get stuck in the first part of getting the assessment done, getting the account set up, and doing the first 2 allocations are probably the biggest roadblock for most people. So we're really, out of our commitment to you guys, we're really focusing on that. So that's where we're going to be going. So as in every webinar that, has something that we're working on having you guys move into. So now the Profit First workshop is completely free for those of you who are in the academy. So, this is just part of our ongoing, we're always adding to the academy. This is just how we're doing it. If we understand some people don't want to purchase the whole academy, so and because people have requested, we're make sure that our workshops are available for singular purchase. So the 4 workshops, and then you'll get access to Profit First University video series. It's a 10 video series, but they're nice and quick. So it's like 10-minute videos. So you move through it very quickly. You're going to have access to the Business Basics course. I'm actually working with Sharon Lecter, who is on the President President's Council for Financial Literacy. She has a bill that just went into Congress yesterday for reform for student loans, and we're going to be working on trying to get some videos in there on cash flow and balance sheets to have that add that to our part of our business basics course as well. We're going to be looking at, you're going to have customizable spreadsheets that you're going to be able to use for your business. We're going to get you the core chapters of Profit First, which really, I mean, that's just kind of a bonus. You know, you can get it on Kindle for $9.99. And then we're going to have access to the live Q&A. The workshops, just like all of our workshops, are $97 if you'd like to purchase it separately. But, you know, if you're a member of the Academy, again, completely free. So if you want to register just for the workshop, it's bestfromthenest/PF. And if you want to look at maybe the Academy as an option, Unstoppable, AmazonAcademy.com. And Cindy really, you know, when it comes down to bookkeeping for Amazon sellers, and in combination for Profit First, I have been really impressed by Cindy and her knowledge, not only of the reports. She seems to have a very good understanding of how Amazon works, how Amazon sellers work, and really a good understanding as far as making sure that things work. And she does have a good team behind her. So if you know you want to work directly with Cindy, then you can reach her at bookskeep.com. You know, remember that she has been very generous with her time in the Academy and here on this webinar. So please be respectful. You know, and you know, if you're looking, she's more than happy to answer questions. But let's make sure that you only contact her if you're really considering having her come on as somebody that's working with you. So we're going to open it up to Q&A. I know since we lost a couple people on the webinar, the Q&A might be a little shorter. For those of you listening to the replay, the webinar just kind of cut out. Sometimes just things like that happen, and we're just going to roll with it. But there were some questions in there before, you know, so I'm going to try to kind of jog those out. If anybody else has any questions, then we're going to do that. What we're going to do for the raffle is that I'm going to look at the registration, and we're actually going to double the prizes, and everybody who showed up for the webinar will be eligible. And then I'm going to post that whoever won on that, I will PM them, or I will post it on the Best from the Nest Facebook page. So, because I want to make sure that, you know, everybody who had a chance, you know, if they got booted off and they couldn't get back on, they don't lose that chance. Now, if you'd like to be featured on the Unstoppable Entrepreneur podcast, what you're going to need to do is make sure you get past your first allocation. And then once you get past your first allocation, I want you to send me an email. And what we're going to do is we're going to talk. We'll do a little Skype interview about that process and what it was like for you, and you'll get a chance to be featured on the show. So we'll go ahead and move into questions. And Cindy, let's go back to the inventory account a little bit, because people had some questions about the inventory account. So how somebody asked, how do you know how much money, you know, if I've just been kind of eyeballing it, just like what's available, how do I know where's a good place to start looking for what percentage to put in the inventory account?
Well, a good number is what your cost of goods sold is, but most people can't start that high. So I back into it when I work with clients. We start with that cost of goods sold number, and we build out that spreadsheet like I was showing. But then we look at what our other expenses are, and then we go backwards, and it's kind of like reverse engineering. Most people that haven't been in that mode of replenishing their inventory as they sell can't just start with that. So we look at what the expenses are. We figure out how much we can afford to cut our expenses, and we put that towards inventory. That's how I tend to do it.
Okay. And, you know, so, and then with the other, so, you know, so if somebody is just starting out, you know, I think, because somebody said, well, how do you do this if you don't have enough, you know, if you don't have enough basis? I think in the book you said you start at 1% and then start working your way up, right?
Yeah, that's right.
So, you know, in the beginning, the bulk of your money is going to need to go towards your inventory. You're going to have some very basic business expenses. But, and so we're going to start maybe with the Q1. So it'll be primarily inventory, some operating expenses, and then a very small amount for taxes and profit and owner's pay, probably 1% for those three. Would that be fair? And then keep everything else kind of, so most of the money is focused on inventory?
If the finances allow that, then yes, I would do all of those accounts. But for me, many times what I find is that we just need to start getting in the flow and the process. So a minimal starting point is inventory and profit. Let's get that figured out. And once you get that flow, then you can add another account in the next quarter. So sometimes having all those multiple accounts to begin with gets a little complicated, and people find it difficult. So I say, if you've not done anything and your cash flow is tight, let's start with inventory. Let's start with profit. Let's do a quarter of that and get some good experience around how it works. Then we add some additional accounts. But if your cash flow allows 3% to be pulled out of operating expenses, then yeah, go for that.
Okay. So, yeah, so, and then, so with, so if people haven't been keeping a profit and loss, because I mean, I think, I know a lot of people, I know with me, my business kind of started out as a hobby and it kind of got away from me. So, it grew so fast. I was like, I had a real business without even really intending to. Surprise. If that's the case, they should basically, you want to gather as much of your numbers as you can. And, the benefit of having a profit and loss and a balance sheet, and having somebody who really knows what they're doing is those numbers are really going to help you make better decisions in your business, be very clear on what's going on. If you don't have those, you can look at your overall expenses. And then, the Amazon fees are very easy to find because, that's going to be, Amazon can pull a report for you on that. If you've been keeping track of your inventory through Inventory Lab, then that's going to be cost of goods that are going to be easy for you to gather. If you've kept a really great profit and loss, then you're going to look at the amount of your materials and subs for last year. You're going to take the inventory from the cost of goods sold from your profit and loss. And correct me if I'm wrong, Cindy, because you're the bookkeeper and I'm not. But you're also going to add the amount of inventory, the cost of your inventory that's in your balance sheet. That's correct, right?
That's correct. For the period. Now,
yes.
You look at what you purchased during that period. Another great source of information, particularly right now, a lot of people have their income taxes, and your income taxes do provide you with the details of how you spend your money on your business. So that's another place people can look right now if they've had to pull together and assemble their information for their income taxes, but they didn't pull it together, using accounting software. The tax forms do give you that information for your business.
And, sometimes, it's really easy, Mike even says this in the book, it's really easy to get focused on, and, analysis paralysis, having the perfect numbers, but really perfect is the enemy of done. So, and I know that especially for the very analytical, that's like blasphemous, but, when it comes to things like this in entrepreneurism, you just need to start. So even if your percentages are wrong, you can adjust them. Remember, this is your business, so you get to decide. So we're going to set the bar low. Do the best that you can. And then as you're keeping better track of your numbers, you're going to be able to get better results and a clear answer of where you need to adjust those target percentages. But the main thing is to get started, to just do it. And if worst case scenario, start with, if you're worried about having too much, err on the side of caution. And then if you end up with an overflow in your operations account or your inventory account, then you can always move up that percentage. Remember, we're rolling this out over a very long 6-quarter period. This is not a quick fix. This is not Slim Fast. This is Weight Watchers. We're going to be taking things step by step. My mom still drinks Slim Fast. And I'm like, you realize that's not food. That's why it's not in the food section, is because it's not food. So, but so there's those things. Now, I know that Adrian had a question. He said he likes to have, and Adrian is one of the people that actually does this. I know a lot of people say they do this and they don't really do it, but he likes to have everything on his he likes to have, basically his credit card is his OpEx account. And he so he wants to, because he wants to be able to get all the reward points and the discounts that he can get from putting things on the card if he pays them off every month. Is, I mean, what is your experience with like using like maybe a credit card as an OpEx account, and paying it off every month?
That's fine. I have a lot of clients that use their credit cards to get those points, but there is still an operating expense account, and those funds still get allocated to that. And when it's time to pay off that credit card, there's a transfer from the OpEx account over to the credit card. So it's no problem using credit cards. And a lot of people do the same thing with inventory. That's another thing I recommend to clients is if you have an inventory account, also have an inventory credit card. Don't mix up your inventory charges on your credit cards with your operating expenses. It's another place where all that gets jumbled up. Segregate that as well so that you have an inventory credit card, and then when that inventory credit card comes due, you've got your inventory collected in your inventory account. You can pay that inventory off.
And I actually kind of wrote in Sharpie. So I wrote, like, because now I have, I've got, because we have multiple businesses. So, I have our Best from the Nest and our Robin's Nest accounts, the OpEx accounts cards. I have the debit cards for those. And then I have a debit card for the inventory for our Amazon business, right? So I actually wrote in Sharpie on there. And then I also put like a little card in, I put, just like a business card. And I wrote on there with the ending numbers, and just in case I ever got mixed up, because sometimes I get flustered. And so, you just keep the cards that you're going to be using for inventory and for operating expenses available. And then, what I did is, because I wanted to make sure I cut every expense that wasn't possible, or that was possible. So what I did is I took the business account that we had been running, I kept that as our income account. And then I canceled all of the debit cards that were connected to that card, and then I moved everything, all of the new expenses over. I transferred all of the accounts over, basically like if I had lost the credit card, over to a new account. And there were a lot of things that was like, I forgot that I hadn't canceled that. So we actually we got rid of about I think like $2,000 worth of expenses.
Wow, that's great. Yeah, canceling a credit card will you'll quickly see what's coming due that they want you to re-up for, because they'll send you an email and say, hey, enter your new information here, and it's a good time to go, do I really even need that, and kick out a bunch of that stuff that you don't.
And, so I'm trying to, so, and the other question that, somebody had earlier was, they were worried about the extra, because they're still doing their own books, they're doing it in QuickBooks, and they were worried about adding all these accounts and how much time that would add to the bookkeeping portion of it.
It's typically not a huge additional task, because the additional account, now you're going to have money flowing through the inventory account. You're going to have money flowing through the OpEx account. But the other accounts are just holding accounts. You're just putting money in, and you may have 2 transactions a month. So it's just a transfer. I suspect there's transfers going on now, but this is kind of a disciplined transfer. And so once you implement this, it doesn't. Well, I'll tell you how I handle it from a pricing perspective. When I have a client and that I'm quoting their work, I look at all their transactions, and if we're adding profit first in, I don't up the price, because I don't consider it's going to take appreciably more time. So that's how I look at it. It's from a time perspective, in us doing the job, it's not enough that I even change the price for the client. So
well, yeah,
because it's a ton of work.
Because it's basically like, if you had a debit card and then you had like 3 credit cards, it's going to be the same thing on your income statement and your balance sheet. So, because that's fairly correct, right?
Mm-hmm.
Yeah. So the way that the inventory relates to your your balance sheet and your profit and loss is going to stay the same, because, and really we're only adding, if you have 6 accounts, we're adding, so 6 accounts, if we're doing 2 allocations a month, we're only really adding 12 transactions a month. And those are really just transfers. And so those are usually pretty easy to reconcile. So it's not going to add a tremendous amount. It is going to add a touch, but from my perspective, I think it's actually going to end up being less transactions, because now I'm a lot more cautious. I'm getting a lot more cautious about where I spend, and so there's less transactions in total, I feel like.
Yeah, I think that's right. Like I said, it has never, doing transfers in any of the accounting systems is not a hard thing to do. You point, where it comes from and where it goes to, and it takes care of both sides of the account at one time. And and like you say, you're looking at cutting expenses, so theoretically you're going to be cutting some transactions in another part of the business.
And this is really, it goes down to efficiency. We talk a lot about efficiency too. And if you're only paying the bills twice a month, because somebody asked, well, how do you, because one of my questions was, how do you get to have enough, money in the OpEx account if, if your cash flow is from kind of the week, going forward. But, so it felt like I was when I was looking at trying to implement, it felt like I would be behind. But now that we've had a couple of allocations and, a couple bill cycles, I'm seeing that I'm not forgetting bills anymore. Everything is getting taken care of, and I'm not having as many of those moments that, keep you up at night. Because,
Right.
and then even when, we did have something, because we switched around some things, and we had one bill that didn't, we thought we had gotten paid that hadn't gotten paid. And it was like, where normally I would be rushing around trying to pay it, I was like, well, Monday's the 25th, bills get paid on the 25th. And I just felt so powerful and empowered, because I was like, bills get paid on the 25th. That's when they get paid,
And
and
I got the money there.
and I have the money, and so it was, and it, so it's about really creating a long-term future for your business. So I'm going to give people another couple. Is there any other questions that you've seen that a lot of people have asked that you think that probably would have been asked if we'd had a little less technical difficulties?
Well, I think we tried to build them in earlier. The inventory thing is always the biggest question that I get from Amazon clients. The other question that I get generally is about how much does it cost to get the bank accounts, and we kind of talked about that with Mike in terms of doing some shopping, doing some negotiating. Those are the general questions that I hear from folks. I'm trying to think, but I can't come up with anything in addition to that.
And so those have been the the main things. We did try to really build everything into the presentation. And so I'm going to edit the replay, and we're going to get it all up, and then on the replay page we'll have the winners for the raffle. Excuse me. Sorry, I still have a little bit of a cough. So we're going to get all the winners of the raffle on there. And then if you have other questions, especially if you're part of the Academy, of course, you can always answer questions, ask questions anytime. And if you can reach Cindy at Bookskeep, and I think that's pretty much it. We are really looking forward to the workshop. We know that a lot of you, this is really going to be a turning point in your business. I know I feel like I've turned a corner. I don't know if Cindy, you can tell in my voice that when I'm talking about cash flow,
A lot more confidence there, I can tell you, from when we first started talking.
Yes. So, because, sometimes you think, well, just because you hit a certain, your phone's never going to go off and be like, you have arrived. You will never have a cash flow problem again. So, when you grow really fast, things like that, all of those things can cause a burden on you. And I really see now, if we'd had Profit First, 2 or 3 years ago, wow, how many stressful nights could I have avoided? So this is, I'm really excited about what this could provide for our community. And I think it's time that we really start talking about making sure that our businesses are generating that profit. So I think that we'll go ahead and call it a wrap so I can start editing the video. Cindy, is there anything else you wanted to say?
Well, I just appreciate everybody that was on earlier and that were able to get back on. I really appreciate their attention and their time, and I hope I get the opportunity to talk with them and be happy to answer any questions that that folks may have as we start to work through this implementation for your business.
Awesome. Well, thank you guys again, and we will talk to you soon. Feel free to email Cindy at cindy@bookskeep.com, and that's CYNDI, or excellence at bestfromthenest.com. Have a great night.